friends, welcome to our YouTube channel PNJ Legal. We are 12 years old law firm and we are dealing in all sort of audits, accounting, financial reporting, legal compliances, license approval works. We have a team of chartered accountant and company secretary and advocates, and we are providing a whole range of services at one place. We also have a startup called as pnjhub.com, which is a first time bringing an aggregator of professionals working in middle level management services, and those have a very special features of chat with expert, where you can chat with the expert in 1 minute or 2 minutes or 5 minutes, and you can also hire the professionals for one day. You can discuss at the discussion forum any of your doubts, clarification. You can avail a space for even an hour, office space for your meetings, and you can also take a e-certification programs on management topics. The purpose behind covering today's video is to bring certain clarities on the amendments taken by the Companies Act 2013, because many professionals are still revolving around the Companies Act 1956. The rules, regulations are totally different from the Companies Act 2013. There's many initiatives, many new concepts coming in Companies Act 2013, which is still professionals are not much aware of. So the new concept of one-person company has been introduced, where you have a capital of less than 50 lakhs. And so the new concept of one-person company has been introduced, where you have a capital of less than 50 lakhs and turnover of less than 2 crore. So you can be a one-person company where there will be a one director, one shareholder. So it's a very easy compliance also. The company can also apply for a dormant company status for very first time in Companies Act 2013. The inactive companies which has not done any transaction, any revenue earning operations, any asset liabilities from last 2 years, they can apply for a dormant company status. There's many rules regulations prescribed for the private placement and share allotment. Earlier it happens that share application money come and it's shown in the books of accounts from a long years, but no allotment has been done against those share application money. So now it cannot be done. It has to be within period of 60 days. The allotment has to be done from date of receiving the application. Special resolution required to be passed. The price justification has to be mentioned in the explanatory statement, and if the company failed to allot the shares within 15 days, he has to return the share application money. Share application money cannot be utilized for any other purpose other than it has been raised. A separate bank account has to be maintained for receiving the application money, and also the transaction related to allotment shall be done through that account only. Offer records has to be mentioned in PAS 5 form. Offer details in form PAS 4 should be filed within 30 days. The form PAS 3 for allotment within 30 days has to be filed to Ministry of Corporate Affairs. New rules has been prescribed for the acceptance of deposits. Earlier there are many transactions of unsecured loan and advances which has been regulating between the companies, between the associated parties, between the directors, shareholders and the company, and there's no prescribed clarity on the definition of the deposits acceptance. So now the public company can accept the deposits if they have a net worth of exceeding 100 crore and turnover of exceeding 500 crore. So this acceptance of deposit rules applicable to all companies except banking company, NBFC company and housing finance company. A private company is prohibited to accept unsecured loan from the relative of directors and shareholder. They can take a loan from the directors in a normal ordinary course of business, and on filing of declaration from the director that it has been their own capital. So under section 138 of the Companies Act 2013, there was mentioned about the appointment of internal auditors. So internal auditor aspect covered for a very first time. So to whom those are applicable? Appointment of internal auditor is mandatory for all the listed companies, all the unlisted public company having a paid up capital of more than 50 crore, turnover of more than 200 crore, outstanding loan of more than 100 crore and outstanding deposit of more than 25 crore. Even the private companies having turnover of more than 200 crore or outstanding borrowing of more than 100 crore, the internal auditor appointment is mandatory for them. So who all can be appointed as an internal auditor? It is not necessarily that it is a practicing chartered accountant. It could be any management officer. Internal auditor may or may not cannot be an employee of the company. Internal auditor could be a chartered accountant, company secretary, cost accountant, or any other professional as decided by the board. So rules has also been prescribed for the statutory auditor. The first time the rotation of the statutory auditor has been prescribed. Auditor, if it is a partnership firm, there's a maximum allowance of 2 terms of 5 years period, and if it's a proprietor, there's a 1 term of 5-year period is allowed. So after that it has to be a mandatorily rotated. Certification of the annual return also been prescribed by the practicing company secretary. So the practicing company secretary has to certify your annual return in case you are a company with more than 10 crore of capital and 50 crore of turnover, and all listed companies all has to mandatorily certify their annual return by the practicing company secretary. So for the disqualification, except the normal disqualification of a director, the first time they has been introduced in case they are director in any of the company who has not able to file the financial statement for last 3 years, they still be disqualified, or the companies who has failed to repay the deposits, interest, redeem the debentures, or pay the dividend for a period of 1 year or more, still they are disqualified. New rules also has been prescribed for the annual general meeting under section 96. Now the annual general meeting can be held on the Sunday and holidays, but not the public holiday. Notice of the annual general meeting can be given by electronic mode. Corporate identification number of the company and website address has to be mandatorily published in all the disclosures, marketing collaterals, notice board, organization place, workplace, their offices, their subsidiary offices. Corporate identification number and website has to be mandatorily noticed and published. So rules has been prescribed for the corporate social responsibility under section 135. So where 2% of the net profits of the last 3 years you have to be mandatorily put in a corporate social responsibility areas, and in the NGOs you can donate with who are registered under section 12A and 80G. So what all companies who has to follow the corporate social responsibility? The companies who has a net worth of more than 500 crore, who has a turnover of more than 1000 crore, or who has a net profit of more than 5 crore, they have to mandatorily follow the CSR rules. There's very interesting thing happening earlier where the directors and the company are rotating and transacting the amounts as a loan and advance, and one time loan is given by company to director, other time the advance given by director to the company. So this continuously happening. So now there's a section under 185 which mentioned there is no loan to director can be given by the company. You can refer our presentation. It's applicable with effect from 12 September 2013. No company shall directly or indirectly advance any loan, including any loan represented by book debt, to any of directors or to any of the person to whom the director is entrusted, or give any guarantee or provide any security in connection with loan taken by him. So thus a company cannot advance a loan now to director or relative of the director or any associated related party of the director. They can take a loan from director, but they cannot give a loan advance to director. So what are the exemptions? The loan can be given to the managing or whole-time director as part of condition of service extended by the company to employees, or a company can provide loan in ordinary course of business, and interest has to be charged at a rate not less than bank rate provided by RBI. We are legal consultants and we are here to assist you in any of the complex topics for the Companies Act you want to understand. You can write, you can comment on this channel, you can ask for any opinion, view, advice on the topics which you want a clarity on a Companies Act. So after the Companies Act 2013, there's a huge revolution come into a corporate governance. There's a many rules and regulations which has to be mandatorily prescribed to be followed, but those are not being followed because of non-awareness. So you can ask for any opinion or advice from us. Thanks so much.